Good evening and welcome to another video of lots of options. This week, at this point in time, as we sit here on Sunday, futures markets opened just a little while ago. I am really hesitant to take any trades on the upside or the downside, looking for shorts, or even in terms of credit spreads or debit spreads, looking in terms of either direction. There is one possibility of an unbalanced butterfly or a butterfly trade on the S&P and on the NASDAQ, and I'll go through those trades. But we have a tremendous divergence here between banking and tech. And without banking, tech at some point in time is going to falter just as a result of the fact that people are going to be afraid that tech won't be able to borrow the money it needs to keep moving forward. And technology is very dependent upon the bond market and upon the equity markets in terms of being able to raise capital. And if we don't have a stable banking system, then we're going to be in trouble. So, and talking about trouble, we can talk about the credit crisis of 2008. But we're not going to go there tonight. For right now, we're going to take a look at the fact that JP Morgan hit a high of 141.10 end of January, beginning of January actually. Stock at this point in time, see, a lot of confluence in here. We've got our 20-day, we've got our 50-day, all moving in together. We've got even possibly a wedge forming in terms of the fact that we've got a triangle or a wedge, and that may break out on the upside, it may break down on the downside, but what we're seeing here is we're seeing a stock which is unstable. It's not moving in a direction. All of this in here, okay, is chop. It's non-directional movement. We haven't gotten into a trend. We haven't come into a downtrend. We are simply moving back and forth. The 200-day moving average is up around 117.64. So again, we're in a position where no one knows what's going on with the banking stocks. We do know what's going on with tech. I like to look at one other banking stock to show the divergence here, Bank of America. And in Bank of America, we see, give me a second here, let's blow this up. Okay, Bank of America, again, sitting on its 20, sitting on its 50, 200 moving day average very far away, and we're at a high of 35.72 on 12/27, and since then we have seen it bounce back and forth, and then with the coronavirus, okay, right over here, we on 2/21, it came straight down. But it's been completely choppy, non-directional. Nothing has happened with this stock ever since then. So while we see the S&P up near the 3,000 mark or the 300 mark on the SPYs, we do not see stocks in the banking sector confirming that. And we actually see people staying away from the banking sector, and the banking sector being weak overall. However, when we look at stocks like Netflix, we can see, one second, let's blow this part up. Okay, we can see that the stock had a high of 449.52, and we're now trading at 435.55. If I could get in here, okay, and we're above our 20, 50, and 200 moving averages, so we've got a lot of support on the downside. If I could get in here for a move, a directional move on an unbalanced butterfly or a butterfly, I would, seeking to try and go ahead and capture that move up to 448.93, maybe 449.52. Let's say it tests the all-time high. But on the flip side of that, I don't necessarily see that happening. It's a move which I'd like to see happen. However, we have had 1, 2, 3, 4, then we had a down day, 5 up days, then a doji, which basically is a period of uncertainty and not knowing, and then we close to the lower end of the bar in a hammer fashion, and we basically have a nice trend up. It bounced right off the 200-day moving average, and the path of least resistance is higher. Therefore, if I was going to take a trade, I'd be looking at Netflix as a long in here, or maybe even a credit spread somewhere in the 460, 470 range. Taking a look at something in the chip sector, we'll take a look at Qualcomm. Qualcomm is interesting. Let's blow up the latter part of the chart here. Qualcomm is interesting because we are, again, in Confluence. Okay, are we going to move up? We have been in chop mode basically from April 14th all the way to May 10th. We have no real directional move. We are on the 200-day moving average. We are above the 50. We are above the 20. But interestingly enough, let's add a drawing in here. Let's move down to our Fibonacci retracements, and we can take it down to our lowest point over here. And we are basically sitting on our 61.8 retracement level, okay, which falls out at around $79, $80, $80.56, somewhere in that range. And we are sitting on that 61% range. So again, it's a period of uncertainty. Are we going to break through, okay, the golden ratio number, or are we going to test it and fall back down? And at this point in time, I'd want to be far away on the downside because I'm not so sure how far we'll go on the downside. And on the upside, I'd rather see it move through, have price confirmation, and then move ahead with that. In terms of a trade with regard to Qualcomm. Taking a look at Apple, we can see here in Apple, again, all-time high, 327.85. Okay, that all-time high was January 31st. Yeah, January 31st. We are now at 310. So we're basically within 17 points of an all-time high. Apple is above all of its moving averages. We've got support on the downside. We are, however, okay, at the middle of the standard deviation channel, which is interesting, which provides some indication that we're at a level of resistance. But more interesting than that is the fact that Apple has basically skyrocketed from 223 up to 310 in a matter of, well, let's take a look at this, 323, okay, 5.8. So basically 6-7 weeks, we have moved almost $100 on Apple. Incredible move, incredible rally. How far will it continue to go? Like everything else, we don't know. But we can play the odds, and if we were going to play the odds, we would play them higher. Okay, because Apple has a lot of support to the downside, and maybe it would pay to look for a credit spread in the 240 range, somewhere in that direction, and trying to put ourselves in a position to collect some credit this week. But again, it would be a small amount of credit unless we're going to trade big, unless we're going to trade a large size in terms of the number of contracts. And we might have to have fewer trades this week in order to make the returns that we're looking for. Now, in terms of the QQQs, okay, we have an interesting week on that front. In terms of the QQQs, we have a gap that was formed right back here on February 21st. Now, the gap isn't very large, but the bottom line is markets like to fill gaps. Another reason to be long to a certain extent on the QQQs or the NDX for a short move from, let's say, 225 to 230, somewhere in that range. It's a nice 5-point gain on a stock like the QQQs, or moving in that direction for the NASDAQ in general. And again, a butterfly trade, broken wing butterfly, unbalanced butterfly, all look like if you can bring in a credit on it, it's worth taking, or a very small debit. If you're talking about a large debit, it's not going to be a profitable trade, in my opinion, or it's going to be a negligently profitable trade. And I would say not worth the risk. In terms of the SPY, which would be the same as the ES or the SPX, we can take a look at this chart as well. Interestingly enough, we are coming up on the standard deviation line, on the standard deviation channel. We had a very small range with regard to trading on Friday, even though we gapped up and we stayed up, which was interesting. We gapped up about 30 points, 35 points, and then we traded up as high as 40, 45 points. I know I had to close out 2 option trades because once we were above the 215, 220 range, 225 range, I was getting caught in the middle there. They'll be part of our update for the week. But the bottom line is, if we're going to take a trade here, it's going to have to be up in the 300 range. And that 300 range, we have major issues up there. Why do we have major issues up there? Give me a second. Let's move this chart back to where it was to a certain extent. Let's take just this section of the chart. Okay. With regard to 5.4 over here, okay, actually 5.7 over here, and 4.29 over here, we have some resistance at the 294, 295 level, which we've been at recently. It's the most recent pivot high. Anywhere above that, we're going to retest that 200-day moving average. We don't have a lot of room. But on the flip side, as you get above the 300 mark, you have very little credit to go ahead and take. So, or that the market will offer. So what I would be looking for here is, again, a butterfly trade or an unbalanced butterfly seeking to make a credit between the 288, 290 range and up to the 3,000 range or the 300 range on the SPYs. But this week, we have so many different issues coming together. The gap to fill on the NASDAQ, the 3,000 range on the SPY, the 200-day moving average on the SPY and the ES and the SPX and all these other majorly traded options, ETFs, futures, etc. We've had a tremendous run. When looking at all of these different facts together, trying to create a composite picture and trying to create a narrative, the narrative that I come up with is that we're getting very close to the top of this range. Watch here, we go up, 298, 294, we come down, we test the moving average, we then move back up, 289, somewhere in that range. Next range is 294 to test where we were before on April 27th, and then it's up to the 200 moving day average. Not a lot of room to run on the upside. On the downside, if there's any negative news or anything else, we could retest 272 very easily and blow through the 283.61 level on the SPY. And these are all things you have to look out for, which is why this week, caution. Look at where the charts are telling you to go. Look at where the futures are telling you to go. Be careful. Be cautious. Watch the areas of confluence. Wait for the trend to develop. And also watch the dichotomy between the bank stocks and the tech stocks. One reaching all-time highs, one still within a rock's throw of its most recent low. On JP Morgan and on Bank of America, two leading major big banks. So that is all for tonight. If you'd like to see our track record, if you'd like to get our trade alerts, please visit us at alloptionspreads.com, www.alloptionspreads.com, and we will continue to offer our analysis, our thoughts, to look at the different studies, and we will continue to scour charts on a regular basis to go ahead and try and find the most profitable setups and to use all of the different possible options. Thank you. Once again, www.alloptionspreads.com. Have a good night.